everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube and podcast partner, Don Durrett, founder of goldstockdata.com, a great resource I was just using this weekend, Don, to go research some gold and silver stocks. There's a lot of ways that website can help investors in terms of slicing and dicing the data, so thanks for putting out a great resource there.
Yeah, I mean, I've been getting unbelievable number of kudos from people that have used the website successfully. It's been a really nice tool for people.
Yeah, agreed. And it's very affordable, a couple $100 a year. So it's really not that much of a stretch. Our services at Feneck Consulting are a little bit higher. I mean, the real time aspect of what I'm doing with emails and stuff is really making us different. And that does cost more, right? Like I was talking to a CEO who, I won't name who it is, but he was like amazed when he had a short seller in his stock. He called me up. I was at Beaver Creek. You know how busy we were at Beaver Creek. I just happened to be lucky enough to be in my hotel room changing. And I was like, yes, okay, I'll put something out. I put something out as soon as I hung up because he showed me a screenshot of 500,000 shares crossing the tape in Europe against his stock short. And I was like, who is shorting 500,000 shares of $1 stock right now? Like that takes him some guts. So I just outed the guy, and the stock went up 10% within that same day. I mean, and so you saw what happened with Aya, right? You brought that up on our last interview. I don't even know who it is. I'm not going to say they're good or bad because I don't know the entity. But when these guys are shorting stuff, that's like a 2 year ago kind of concept, in my opinion, right? Like, I mean, do you disagree, or I just feel like that's so risky at this point with gold and silver just ripping higher.
Yeah, the one thing about shorting is it's kind of hidden from us. We don't know who's shorting. We don't, we always see these big shorts. It's pretty common in the business, right? The thing we worry about is, are they naked shorts? That's something that Eric Sprout has been trying to fight against, and we can't try to identify if they're naked or not. But yeah, there's a lot of shorting that goes on, absolutely. And the reason why is because they're so volatile and you can go either direction in a big way. And so you're going to get a lot of shorting. That just goes with the business. That actually doesn't bother me as much as traders controlling the price. We haven't seen that lately, but what happens quite often is traders are very short-term oriented. Like once you start getting a run up, the traders will jump on top of that. And it's like algorithm machine trading. They'll start chasing it up, and then as soon as it takes a little notch down, they jump out and the stock crashes back down. That's what drives me absolutely nuts. And then it has a hard time breaking out because every time it makes a move, the short-term traders are controlling it, and it drops back down. But that hasn't happened the last couple of months because we're in this big bull market. But we'll see some of that price action, and that frustrates me more than the shorting is the short-term traders controlling the price.
Yeah, good point. I did actually see that on a tungsten stock that I own today. We may interview this guy. He's got a really interesting background, but he's the new CEO of American Tungsten, which is symbol TUNGF in the States, TUNG in Canada. In full disclosure, we own some. So I think this will help listeners that we have in terms of how I handled that today. The stock ran up on no news yesterday, right? It ran up again at the open on no news today. And to your point, you could see a bunch of people on level two chasing the stock. And then I don't know what happened, but I think a short came in and just shorted it at market. And the stock went from a buck 32 down to $1.17, literally within a minute or two. Okay. I mean,
yeah.
it was just like, whoa, like, and so I didn't have orders at $1.31 or 32. I had orders at $1.16, $1.17. So I got filled at the very bottom tick because I'm not going to chase something as a value manager. So that's a good lesson for our listeners. When you see this kind of stuff, if you're a momentum guy and you come from the crypto and tech world, go for it. Whatever you want to do, whatever your risk tolerance is. But as value managers, Don and I sit, limit orders sometimes away from the action because we're not going to overpay for something. And that stock closed up today from where I bought it. So, I mean, again, it's how you buy stuff and the timing of things sometimes that matters, don't you think?
Their old axiom, you make your money when you buy, not when you sell.
Yeah.
So entry points are really important. In my newsletter just came out today, I talked about mistakes people are going to make, and the raw bad entry prices is one that people are going to do. They're going to be chasing these things, and that's, you got to be real careful on your entries.
Yeah. And we say at Feneck Consulting all the time that we get the entry price wrong consistently. Where I'm different than most portfolio managers or leaders is that I'm tenacious. When I want something, I'm going to buy it 4, 6, 8 times. I'm never going to buy it once, like so many newsletter writers. Like, who can pick a perfect entry point? It's crazy. It's just like, oh, we're going to buy it and then write it up. Okay. Because you have a crystal ball as to that's the best entry point. I mean, like, in a hot gold market like this, you would make a good point, Don. You have to own stuff. I tell clients like this. You and I said this at Beaver Creek. I know I said it to our audience. Please leave here today and buy something. That was September 9th. Imagine if people went and bought any of those names we talked about. All of them are up. I checked. Every single name is up significantly from where we bought. We mentioned them September 9th. Not one has dropped. Right. That's the environment we're in. That's not us being seers. That is, gold is cranking and you have to get on board and buy stuff, right? But
Yeah,
buying it once is flawed. You have to buy it multiple times to create what we call a blended cost basis and then have a good experience.
right. So my favorite way to invest is to buy to the bottom. So absolutely, you buy it and then it goes lower, buy more. It goes lower, buy more, and eventually you're going to get to the bottom, and you're going to end up buying the bottom. And that's my favorite way to invest. Absolutely. So now that I've got some entries here out of Beaver Creek, if we get a correction, can buy some more cheaper, right? But I'm not necessarily going to buy. The only ones that I'm going to press my bet on are the rare ones that I just absolutely love, like Talisker. Talisker, I don't care where it's at. When we get a dip, I'm going to add to it. If it's higher than what I paid, fine. But that's a buy the dip stock I've already identified. Now, 1911, I'm fulled up on that one. I'm good. Certain stocks I have a minimum allocation I want to get to. If I'm there, I'm just going to hold it, and. But if I like a stock and I don't have enough, I want to buy the dip on it, or press it on the dip. One of the two, right? One final point I want to make about what you just said about being on the train, being invested. I just wrote, my newsletter came out today, and I basically said that if you're in a bull market, the chances are you are going to get a correction, but the correction is going to be very short-lived. In a bull market, you're not going to go down and stay down. That's not what a bull market does. You can ride that dip out. So it's better to get on the train in a bull market and ride it. That's the best way to do bull markets. And then the biggest mistake people are going to make is selling early. And you don't realize how early we are in this thing. I really believe, if you look at historical norms, if you look at 1970s and the 2000s, this thing's got a long way to go, the HUI. I think minimum 1,500 on the HUI. Now, you don't have to wait all the way to 1,500 to take profit, but we're at 600. You really don't want to take any profits until 900, 1,000. You got to be patient here, people. We're still early. And so, so you write it and you don't take two in profits. One final point I want to make is that if you sell half of your stock, you're giving away 50% of your upside. But what you don't realize is that when a stock runs, the leverage increases dramatically. So I have one stock that's a 27 bagger, and if it goes up 138%, it becomes a 65 bagger. I'll repeat. It's a 27 bagger. If it goes up 138%, it becomes a 65 bagger. That's how much leverage you get at the end. Now, if I would have sold half of that, I would have given away half of my profit. So I haven't taken any profit in that stock because I've learned that the leverage is what you want. So don't be giving away all that upside. Don't just give it away. It's like, I need to take half off the table to reduce my risk. We're speculating. We're accepting risk.
Yeah.
Right this thing. You take profits at the right time, not the wrong time. And when you're early in a bull market, this is the wrong time to take profit. I'll end it there.
Yeah. No, no, I think that's a fair argument, Don. I feel a little bit differently, as you know, because I have a fiduciary responsibility, I think, to my real time followers. Like, we need to make money or else they don't pay, right? And I want them on this train for the next 2 to 3 years. I don't want them to quit because they're not making any money, right? And so, like, I'm just being completely honest with people. We sold something today. I got in at $45. It's a major stock. I sold it at 170. It's like, I am thrilled. My followers are thrilled. That you know, I think I could buy it back at 140, 150 in tax loss season. I've got into it with a few clients recently about tax loss selling. They're like, John, come on, it's not going to be like that this year. I hear that every single year. Every single year, people are wrong. So I disagree. I do think that, not with you, but I disagree with the client that says tax loss selling is going to be different this year. It will be there. And that's your opportunity, people. Like, we're in a bull market, like Don is saying, but November 15th to December 31st, there will be selling. There's still sellers out there. When Don and I interviewed Rachel Goldman for Paramount, we literally interviewed her the day we had a huge seller in that stock. And this was August. This wasn't 2 years ago. This was 2 months ago, right? And the stock went from 72 cents to 66 cents in a trade. I realized this because I got filled at 66, again, away from the action, not chasing, right? And someone literally put a market order out there, and I was the beneficiary of that. That stock is now closed today at $1.22, less than 2 months from our interview, right? Like, that is life-changing money for some people. And so, to our point, guys, I think we'll leave it here.
Well,
This is, go ahead.
I had one final thing. So, yeah, so you have clients. And so the average investor thinks annually. They think in terms of annual returns. So you have to focus that way. So I do consulting for private equity, and we are uber focused on annual returns. It's because that's the expectation. So we're
Yeah.
constantly taking profit. Take profit here, profit. So when you take profit, it's like returns. And so you're trying to get the biggest annual return you can get, and then you start over on January 1st. That's the industry. That's the way that people
So
think.
it's
And
absolutely true. It's
yeah,
absolutely true.
but for me as a speculator, I could care less about annual returns. I'm
Yeah. No,
after I'm after the prize. I'm after the prize, right? And the prize
yeah.
is the HUI at 1,500, 1,800, 2,000. So I'm looking way down the road to maximize my profit. So I don't want to
Yeah.
give anything away for the prize, if you will. But you're right. What you do, you have to think in terms of annual returns because that's how everybody thinks.
Well, yeah, I mean, I put out a public, if you go to fennecconsulting.com/performance, I've had a public website up there for many years. And I literally post my numbers just like a hedge fund or a portfolio that you'd see in your mutual fund and your 401k, right? Like, I come from the mutual fund world. I'm very compliant with how we post our numbers, right? And yesterday was a stressful day for me. It was quarter end. It's like, that's my snapshot from September 30th. It's going to be on my website for 90 days. It's like, and I have to make sure that I got up at 3 o'clock in the morning, which is, an hour before pre-market here, and hit anything I could see. I found some good values pre-market, believe it or not. I mean, it's just a lot of work. It's a grind. So when I have my 10-year number in 90 days from now, I'm going to be a happy man.
We didn't get
Because I think,
Yeah, we didn't get a chance to talk any macro, but the one macro point I want to make up and emphasize is today's October 1st, the beginning of Q4. So gold just had a quarterly ending all-time high and a monthly ending all-time high. So that was
right.
massive quarterly end for gold and silver.
Yeah, totally. And that is a good point, because traders look at this stuff. You saw silver up huge pre-market today and had follow through during the regular session, right? Because people that were short were like, "Oh man, this is going to mean bad things for me. This thing's going to 50 real quick," right? Like, this is not going to end well because of the quarterly and monthly close, being an all-time high for gold and quite nicely for silver there. So let's pivot and bring in our guest today, Rob Eckford. Rob is the CEO of RUA Gold. Rob and I just met this year. We just started a position when we met personally a few weeks ago at Beaver Creek. Hey, Rob, how are you?
Good to see you, John. Thanks for having me. Nice to see you,
Yeah,
John.
yeah, welcome,
Yeah, of
Robert.
course. So yeah, I've owned Oceana Gold over the years, and when you and I met, Rob, and you were telling me about your project in New Zealand, I started to get more interested because I have to admit, like, it's not a jurisdiction I was really familiar with, but like so many, you put some time in, and you get to know what what makes that jurisdiction unique or less risky than you thought, and you educated me on that. So it seems to be a really interesting story, Rua, and we look forward to hearing from you today.
No, perfect. And I mean, Oceana's been a great example. One as a custodian in New Zealand, they're a great role model to follow. But I mean, talk about a run up. I mean, that's I think about a 4 to 5x in the last 6 months, partly
Yeah,
because of the favorable uh, changes that New Zealand is making and opening up opportunities for that company who already has a big footprint there.
yeah, that's something I hope you'll touch on today for your own opportunity. Why don't you give us, 7 to 10 minutes on why Rua Gold, and then we'll ask some questions.
Perfect. Thanks very much, gents. Yeah, I mean, RUA Gold is a explorer company. We're looking at gold opportunities down in New Zealand, and this isn't a rush to market because we are in a gold bull market. We started accumulating our land position in New Zealand back in 2019, and so times were a lot tougher in the equity markets. We stayed private for a long period of time, but we had really good, strong hands behind us. Oliver Lennox King is our chairman. He's been a founder and made a lot of money for a lot of people in the past through most recently Rox Gold, a West African producer. Before that, Frontier, a Nevada company that sold to Newmont for a couple of billion. So he's seen it all. And to be frank, the entire board and management team are a group of company builders. So, I mean, for your listeners and followers, one thing I know you guys talk about is the people is key. And so we've got a group of people that have all built mines. We built 8 mines between us, all on time, under budget. We've successfully exited from companies at $11 billion worth of value, and we've raised over $2 billion. So this is not our first rodeo here. Now we're solely focused with RUA Gold in New Zealand because I think personally, and I'll be biased obviously, but New Zealand is the best jurisdiction in the world. I mean, we touched on it just before. I mean, the US is seeing these government shutdowns again. I mean, the instability in the world is unreal. New Zealand is in a nice happy bubble down there where they're essentially coming out of a recession. They're creating this economic improvement. They're cutting the government spending. They're doing all the things that a government should do. And one of their vehicles they're using is mining. The new government that came in 2023, they've come in with a mandate to grow the economy using the resource sector. They see the success of Australia over the ocean. They saw a lot of the skilled Kiwis leaving and going over to Australia. And so they said, we need to get our mining industry going. And this is in 2023. And this is when we decided to take this company public. We tied up amazing land positions. We had the right mineralization in the ground. And now we had a government that backing us and wanting us to grow. And so one of the things and what sets us apart and what's really helped Oceana is that New Zealand now have this fast track permit regime, and everyone talks about fast track around the world. New Zealand were about 18 months ahead of everyone. And because it's a small, simple country of 5 million people, it's much easier to put these changes in place. And so now you can get a mine permitted in New Zealand in 6 months. And it's not just proposed, it's not just an idea. There's mines, including Oceana Gold's WKP project, which is adjacent to one of our properties, that's going through that 6 month permitting process. So it's phenomenal. It's a great place to be. The resource minister, Shane Jones, and I have open dialogue. I mean, what explorer with a little 50 million market cap has open dialogue to the mines minister? We co-presented at PDAC in March together. I'm going down to New Zealand later this month, and I've got to sit down with him. Like it's a great place to get things done and move projects forward. I mean, not to harp on the macro side of things, but there is a lot of froth in the gold market right now, and people are taking that shotgun approach of everything is going up. But if you don't have a project that has that visibility to actually be a real mine within this bull cycle, then there's no point investing, in my view. And that's what RUA Gold has. Sure, we're an explorer today, but we're run by company builders in a jurisdiction that's permitting in 6 months, and that's what we're looking at executing on. So that's the sort of 40,000-foot view. To get a bit deeper into what we're actually doing down there, we've got 2 projects down there. One on the North Island, it's called Glamorgan. It's in this Hauraki gold field. That gold field has already produced 15 million ounces of gold. So it's a big volcanic epithermal elephant hunting country. The Lundins said best, if you're going to go out and find elephants, you better go to where the elephants are. So that's what we're doing up in the Hauraki. We're situated less than 3 kilometers from that Oceana Gold WKP project. That's already a 2 million ounce deposit at over 18 grams a ton. It is phenomenal high grade. It is tier 1 jurisdiction, tier 1 ore body. And the geologist that found it is our COO, Simon Henderson. So we're not just doing a geology play. We've got the actual geo and the team around us that found that discovery. Oceana Gold took it over and they've moved it forward. But our geos on the ground are seeing the exact same surface footprints at Glamorgan that we see or they saw at WKP. We've done about 18 months of surface work. We've done the CSAMT, the resistivity, the magnetics, the soil sampling, the mapping, all the precursors to drilling. And we're seeing really exciting things. The actual alterations we see are parallel to WKP. So we're excited. The permits are in. I'm meeting the government later this month. We're aiming to have drill permits by November this year. So a really major catalyst. And a lot of people are trying to get positions ahead of that drill program. So that's much more the exploration side of our story on the North Island. What excites me, because I'm not a geo, I'm a finance guy. I like building companies. I like the M&A side of business. We've got this property down in Reefton, and Reefton is on the South Island of New Zealand. And through a mix of M&A and some strategic acquisitions, we've picked up this Reefton Goldfield package that covers 95% of this goldfield. And we're in a town called Reefton because it was full of gold reefs in the early 1900s when there was a gold rush here. So it's already had 2 million ounces of past production, grades of 9 to 50 grams a ton. We're talking an orogenic greenstone belt, so lots of narrow veins. Think about Victoria, Bendigo, Ballarat region, the Southern Cross gold story, Fostervilles, that's the same mineralization. The Lachlan Fold Belt goes from Victoria all the way across the South Island of New Zealand. So age of rock, mineralization style, it's all identical. And it's a gold antimony, which again is identical to what Southern Cross is seeing. And we could spend another half an hour on antimony because it's an amazing byproduct to have, both economically today, but also strategically for getting this thing permitted and moving along even quicker. But right now, that's our advanced project. We have 3 drills turning there today. We've already put out publicly that we're looking to triple that resource down there by the end of the year. And every single drill hole we hit, we're on the system now. We're hitting the structure every single time. And we're going to do a resource refresh at the end of the year. So we're in a gold district. We've de-risked it because we know there's a lot of gold there. And we've picked up the district scale land package. Because when you deal with orogenic systems, you don't just want a section of the gold field. You want a scalable project because it's going to be a generational mine. So I'm personally way more excited about Reefton because that thing is going to be a mine by 2027. And I put all the caveats around that, but it's all forward-looking statements. And that's our internal plan. But I really believe we can get, during this bull cycle, from an explorer to a developer into production in the shortest time on the market.
That's exciting. Let me start with Reefton, because I don't know if you saw it today, Nova Minerals, which Don and I interviewed at $8, sometime this year. NVA is the ticker. They announced that they got a $43 million check from the government for their antimony, which is what I was excited about. Don, being more of a gold buff, was excited about the gold portion of their asset. I was excited about the critical, because I'm seeing more and more of these checks being written, and they're not small checks. I mean, Fireweed got 35 million. Now Nova gets 43 million. Trump just said today we're going to give 600 million to coal. Like there's checks being written of size. Like what what do you see in New Zealand? Like, how is that jurisdiction when it comes to critical minerals like antimony?
So I've got the minister's foot on my neck to move as quick as possible. And that's why we actually have 2 rigs on this one target within Reefton called Old Creek. This is the one that is a gold and antimony rich mineralization. And we're under NDAs with a couple of parties now that we're actually sending our antimony core off to them so that they can start looking at what the recoveries look like. The recoveries from our antimony right now is around 85%. So it's very economic. And that's why I'm always going to say we're a gold explorer. But the antimony byproduct from both the financing opportunity and strategic point of view is so important for us that we do also focus on that. And so we don't have anything, I'll say we don't have anything in the cards in terms of getting funding or needing funding right now because we've got a very healthy treasury right now. But it's definitely something that we're working with parties on. We're building those long-term relationships. These agreements don't come overnight. You have to host these foreign groups, whether it's the US, whether it's the Japanese or the Koreans, they're all looking to secure antimony supply outside of China. And New Zealand, one with its 6-month permitting timeframe, is extremely attractive because they don't have a supply source that's going to come online quicker. I mean, you talk to the Nova Minerals and you have to wonder, like, I like their project, but they're not going to be coming online in 2027. And so
No.
These guys will want to see, and where it helps is having the government across the road saying, yes, we agree, we're committing to these timelines. We want the antimony out the ground. We want to be on that world stage of antimony supply as well. And so we're definitely pursuing those paths, but we're focused right now on building out the resource. And currently we have 8,000 tons of antimony proven up. We'll easily triple that by the end of the year and grow that into a much more sizable resource there.
Yeah, okay, great. Great answer. We just interviewed Paul Hewitt a few days ago, who's the CEO of America's Gold and Silver, USAS. And I was talking to him about their antimony because when I saw that press release earlier this year, we like doubled our position that same day. I'm like, wow, I didn't even know they had this much antimony and the recovery potential looked decent. Paul's obviously like a turnaround expert. So he was talking to Don and I just a couple of days ago that we've been penalized for our antimony in the past, and now as of Jan 1, it's going to be a revenue stream for us. So yeah, congratulations on positioning RUA with someone who can make decisions like this, because you're absolutely right. There are certain jurisdictions that are good jurisdictions. However, the political BS that goes on, these companies are never going to get anything for years because of the red tape.
Yeah, and you do sit in a bit of an awkward position as a CEO because similar to how he would have felt, I've got investors that have followed us into this out of Rox Gold and out of Aris Mining and out of the groups that we've made the money from before, from our previous gold success stories. These guys are gold bugs. They're gold investors. They're the dons of the world. They don't want me focusing on antimony. But as a good custodian of the asset, I need to recognize where there's value for the company, and we do need to make sure we pursue it because, I mean, hopefully we know the company and the path forward better than our shareholders. So I do get some pushback from certain shareholders just to say, let's focus on the gold, let's look for the gold, high grade gold. But the antimony is a key product, especially in today's world. I mean, it's getting more and more apparent every single day.
Yeah, so to answer that question for the non-believers or the people that want you to focus only on gold, I'll give you 3 tickers to go look at as an audience, and you look at the charts and you tell me if this has anything to do with antimony. USAS, we just talked about. Look at that from when they announced that, and look at the chart today. Some of that's their gold and silver, absolutely. But I noticed a pop in the stock literally that day, and it has not really given anything back at all. ALKEF, which is the new Alkane, which is the new Mandalay Alkane. I own Mandalay. I know that stock extremely well. They're the biggest North American antimony producer out there. People don't even know this. Their stock was humming. If you look at the old chart of Mandalay for months and months and months, and was creating some interest that wasn't just related to gold. And then if you look at today, Nova, NVA, I mean, the stock absolutely exploded on the open. It was up 21%, 23% on the open. It faded during the day, but that's telling you something, right? Like there's interest out there. People are seeing that the U.S. and other parts of the world that are not China are kind of way behind the eight ball here.
Totally, and I couldn't agree more. I'm quite close to the Mandalay guys, and our geos are actually doing a site tour in a couple of weeks down to the Costerfield mine in Victoria.
Okay.
Again, that Victoria mine has the same geology as Reefton. Our veins are a little bit wider, but the grades are exactly the same. So it's actually looking like I mean, Mandalay are already producing, and they've been producing antimony for a long time now. It's a 30-year-old mine, and it's still kicking out antimony. And they're a great example because we know the metallurgy is the same. It gives us extra confidence because the question is always the antimony takes away the recovery from the gold, but it's just not true. I mean, that was 30, 40 years ago before the technology is advanced to where it is today. You get 95% gold recovery, you get 85% antimony recovery at the low end. And so it's great to see some real life examples. And I think on the recent quarter, Mandalay had an average realized price of $60,000 a ton antimony, because a lot of the naysayers are like, oh, it's an opaque market and you don't get the spot price. That was their realized price in their Q2 financials. So it is a very encouraging to see some of the guys ahead of us that are setting the stage for us to follow.
Yeah, I agree. I just met Nick, the new CEO of Mandalay Alkane, 2, 3 weeks ago at Beaver Creek. Very impressive with some of my clients. So that was great. Last question, and then I'll turn it over to Don. You mentioned a resource refresh. Can you give us a little bit more information about the potential timing of that, if it's public, and anything else?
Yeah, most certainly. We've come out there with a conceptual plan. Again, the target we're focused on first at Old Creek within the Reefton district is very consistent, and we're hitting it nicely each time. And so we said, let's focus and put 2 drill rigs on there and expand that resource both north and south. There's a 2.5 kilometer strike length on the soils anomaly that we're seeing there. And we haven't reached any of the depth. The 110,000 ounces that's 43101 compliant now, that's about 150 meters wide and 150 meters deep. The step outs we've already done is going 300 meters north and another 150 meters underneath it, and every single one is hitting. And so now we're going to infill it. We're going to make sure we're doing good 50-meter spacing to get a well reliable inferred resource. And we're going to be executing all of that by December and then refreshing the resource for a new 43101 soon after.
Okay, great. Yeah, for a non-geo, you seem to know a lot of stuff.
I'm a bit of a mining nerd. I mean, I've done nothing but mining my whole career, and most of it has been in less luxurious places like the DRC or most recently Colombia. I spent the last 4 years. So I definitely don't sit behind a desk too often. That's not my favorite thing to do.
Very good. Well, thanks, Rob. I'll turn it over to Don.
Hey, Rob. So my first question is, you said that your company is full of experienced mine builders and company builders, and you've also said that in 2027 you expect potentially Reefton to be in production. Does that mean by you?
That's correct. Yeah, I mean, maybe it's opening it to how you opened up the conversation today. I mean, the worst thing you can do is sell too early. And sometimes as an investor, it means selling your stock. As a company builder, it means selling before you've recognized the full potential. And so one thing we like to do, and the Reefton district where we're focused right now and where that pipeline comes from, has huge potential. I said it's 120,000 hectares of property, and there's actually one mine that was operating and is now in care and maintenance that Oceania used to run, that did 1 million ounces across 6,000 hectares. Our neighbor that we now envelope is called Endura Mining. They have 7,000 hectares. They have 800,000 ounces of gold at 23 grams a ton. So you've got these 2 small packages amongst our 120,000 hectares, both encroaching on 1 million ounces of gold. And we're just at one section of that property. So the strategy for us is to prove out a resource at Old Creek, do the appropriate studies, which we're actually going to do concurrently, and then enter that fast track process before the end of next year, which means you're in a 6-month permitting timeframe. And then we're talking about really high grade mines here. So we're not doing anything crazy, big bulk tonnage. We're talking about a little 100 million capex project, US dollars talking, to put a 200,000 ton per annum plant in there. And you're producing 60, 70,000 ounces. And we'll build upside. That's how we developed Rox Gold. When we built that, we built a half-size plant, develop the mine, get cash flowing. Know you can add another ball mill in there and upsize to a 150,000 ounce mine in due course. But the most important thing for us is to get cash flowing, because we own 20% of RUA and our average cost base is 70 cents. We're not here as a 1 cent stock story. We're here as investors alongside any of the shareholders. We don't want to dilute ourselves in oblivion, uncovering the whole reef.
This is hilarious. So our last interview was with Amex Exploration, which was an exploration story, but as soon as it turned into a development story, I liked it and bought it. So I thought you're an exploration story. And now today you basically tell me, no, Don, we're a development story. It's amazing on how many these exploration companies are pivoting into production because they realize that's where the value is. You sell the gold in the ground. And one of the reasons why is because over the last 10, 15 years, gold in the ground has steadily become worth less and less and less. It's like you can't even sell it for what you find it for. I mean, it costs you $50 to $75 to find it, and that's about all you can sell it for. So it doesn't make any sense to be an exploration company for, so you guys know. But if you build it, it's worth $500 an ounce or more. So I mean, I'm just sitting here laughing. They say you can't kiss all the girls, you can't own all the stocks, but people are going, why do you own so many, Don? Well, this is a good example. It's like you find a 10 bagger. If I find a 10 bagger, I got to buy it. I mean, that's just the way I'm wired. So the way that I analyze exploration and development stories, right? I have a checklist, I have rules. And when they check all the boxes off, you got to buy it. So let's start, right? We go to the very top. The first thing you're looking for is a quality project. Now, they have a 100,000 ounce deposit. Okay, it doesn't look great, Don. It's too small. But he's telling you they've only drilled this thing 150 by 150, and it's got a 2.5 kilometer strike on it. Well, what are the chances that this thing's going to be, a dud? So, and he's telling us, he just told us these things are going to mine this thing 60, 70,000 ounces. So let's just do the math on it, right? It's high grade. So that means it's not going to be uber high cost. So it's going to be economic. It's not going to be uber capex. He's talking about 6 months permits. We're going to go into that in a second here, but I want to keep going down my checklist. Hopefully we won't run out of time. So
we're good.
Awesome. So as far as the project goes, if you do the math on it, a 50,000 ounce a year deposit at current silver prices is at least $1,000 margin. So that's 50,000 a year minimum, and it's probably maybe double that. And so you're looking at 100 million ounces of free cash flow a year. So let's just split it in half, go to $75,000 in free cash flow. But he said 60 to 70, so that's pretty low, right? Let's go 80 million in free cash flow. Let's just be conservative. And this is in New Zealand. So we're looking at a 12, 15 multiple. You're looking at $1 billion company here, and it's valued at 50 million. Right? I have your shares at 91 million fully diluted. Is that correct?
That's correct. Yep.
That's 50. So at 55 cents US, it's $50 million market cap, and it's a $1 billion company. Now, how in the hell am I supposed to pass on that? Okay, so that's the property. We start with property, right? The second thing that we look at is the location. New Zealand. That one checks the box pretty darn quickly. The third thing we look at is the management team. These guys know how to build mines. I mean, $11 billion. They have a good, strong team. That's not an issue. That one checks the box. Next thing you look at is the path to production. He just told us that, we think we're going to get this into production in 2027. Guess what? In 3 months, we're in 2026. We're in 2026. He's like less than 2 years out. I mean, path to production. It's like, yeah, well, that one checks the box. The next thing you look at is insiders. These guys got 50%. Is that right?
20%.
Okay, wait a minute. Let me look at my insiders. Okay, now let's use my math on insiders. I define an insider as a long-term shareholder who won't take a 30% premium. Now, let's do it again. How many insiders do you have?
Well, in that case, we're close to 75%.
Okay, then my 50% number isn't off, right?
No.
So, okay, people, the way that I'm successful in investing is I like producers that check all the boxes. So these are my checklists for developers. When you find a developer that checks all 6 boxes, and okay, the last checkbox is valuation. You want at least a 10-bagger, right? So you're 50 million. So you want, anything you want around $700 million market cap or above. I think it passes that check. So when it passes all 6 of the check boxes, I just buy them and I use a small allocation, and I just wait and see it's a potential winner, and then I wait and see who the winners are. Let the winners appear is the way I invest. But I'm just cracking up here because I just keep finding. I want to stop buying stocks. I'm like, I'm done. And then you find another 10-bagger, and it's like, oh gosh, I gotta go kiss another girl. But
I'll say, John,
so I haven't asked you any questions yet. I asked you a couple, but my first question is permitting.
If it was going to be an exploration company, then we've got the wrong management team, because we all just want to build it and get into cash flowing as soon as possible. So I'll tell you that.
Outstanding. Okay, so my question for you is permitting. So in most places in the world, permitting, the hardest part of permitting is preparation before you actually submit. Now, you said 6 months. I think that 6 months is approval period, right? 6 months to get it approved.
That's correct.
Yeah. How long is the preparation period?
So we're in a benefit, and that's where we're starting this process concurrently with doing this resource expansion. So we've already kicked off the process. AMC consultants are already doing this conceptual mine plan for us on the assumption that that resource is hit by the end of the year. So we're not wasting time by sitting around waiting for the resource and then we'll go to the next phase. As I said, I want to take advantage of this bull market, and we know how to do this. So we've started that concept study already. We'll start the environmental baselines as soon as we know what our footprint looks like, so that we're running everything concurrently. And so we'll be doing that over the next 9 to 12 months of environmental baseline assessments, community engagements, and making sure that we have the right design, not just for Old Creek, but also, as I said, with that upsized capacity. We've got a huge land package. We know there's going to be multiple underground mines feeding one central mill. That's our business model. And so we're designing it based on that. And so the studies are already underway. We'll be aiming to be approved into that fast track process by H2 next year, early H2, I'd say Q3.
Okay, so when do you think you'll be able to submit for approval?
That would be that Q3 deadline that we're looking for. So we've already started the baseline studies. I mentioned when we're in Reefton, and there's the 2 properties we don't own. So we have 95% of this Reefton district. One of the properties I mentioned is under care and maintenance now, or under rehabilitation under Oceana Gold. We have a very good relationship with them, and we do all our data sharing. They've been doing environmental studies in the Reefton district for 10 years. So we're not starting at a zero base. We've got a huge amount of environmental data that will go into our environmental impact assessment that we'll be able to utilize, and then we'll supplement with our own studies on top of that. And so we don't need to sit and study for the next 3 years to understand habitats of a bat or something like that. We already have that information. So we're targeting submission by Q3 next year.
Wow, I'm trying to find a red flag. I haven't found one yet. John, did you find any?
No.
One of the best things that I can also mention, and where I'm really confident on the geology in the Reefton district, is that other company I mentioned, Endura Mining, is a private Australian group. We've enveloped their land package. They're fully permitted. They've got first gold pour next year. They've got 800,000 ounces at 23 grams a ton, and they're going to be producing in the middle of our land package. So we're in an active mining hub. The community in Reefton love mining. They already have active coal mines in the district. So we've got one of the best jurisdictions from a macro standpoint but even community focused, it's a big mining hub of New Zealand. And so we've got active mines, we've got coal mines, gold mines, we've got a shutdown mine that's been an amazing rehabilitation story. Everyone is really supportive of what we're doing. And now we're talking about a generational mine opening in this regional town. Everyone is really excited about what we're doing.
Me too. Great story, Robert. Thanks for being on.
Thanks very much, guys. I'll keep watching you guys.
Thank you again for coming on, and we'll summarize for everyone right now, and we'll get an update from you in a couple months.
Perfect. Thanks, gents.
Thanks, Rob.
Thanks, Rob.
Perfect, Don. So, another Beaver Creek winner here. This is why you go to conferences, everyone. You have to go to conferences. Before I jump into this, shameless plug. We have 2 U.S. conferences next year. May 17th through the 19th is our Washington, D.C. conference. That's where I spent 25 years of my career before getting into mining. I have a lot of contacts there, both on the company side, the politician side, the investor side. It's going to be a great show right in downtown D.C. near the White House. Right after that, we're going to Florida, where Don and I spoke last year at the Four Seasons on Fort Lauderdale, oceanfront, beautiful hotel, 3 years old. Again, just a wonderful time to be doing these kind of things, everyone, because when you look at the U.S. conference landscape, everyone, Beaver Creek and Denver, the 2 biggest U.S. conferences, just ended 3 weeks ago. There's nothing coming down the pike of significance until April of next year that I see on my calendar. Every other one that we've talked about, Don, you and I, we've got, Zurich coming up in November. We've got VRIC in January, PDAC in March. These are not U.S. conferences. So, it's like we really hope that investors will take a listen to, the idea of coming out and seeing companies like, RUA Gold in person, because that was like, I bought this thing at 45, 47 cents coming out of that meeting. We're at 55 cents already in a couple of weeks.
Yeah, excellent. I would have bought it if I would have met them at Beaver. I didn't. My loss.
No, that's okay. You had.
I won't be that.
Meetings I had.
I'm not going to be that late though. Its stock is still uber cheap at $50 million.
No. I'd have to look at the RSI, but I know it's under 70 as we speak right now. And many of these stocks, as you know, have been. I mean, Barrick hit 91 in an RSI last week. Barrick. Yeah.
It's absolutely amazing. So maybe we can. Can we talk some macro on the next one? Because we didn't get to talk any macro.
Yeah, let's do it on our next interview, which is coming up not too long from now. But I did want to get your thoughts on, just give your assessment to the crowd about RUA, if you don't mind.
I think I was pretty adamant. I mean, I went down my checklist. I didn't find any red flags. That's the way I invest. If I find a developer that checks all the boxes and prints as a potential 10-bagger at $5,000. I'm currently using $5,000 gold, 100 silver. If I find one of those, I buy them. I mean, that's just discipline. That's just how I operate. So, I want to stop buying these stocks, but when I keep finding 10-baggers, you just got to do it.
Yeah.
Bite the bullet.
Yeah. What I thought was really interesting on this one was the share structure, and you guys walked through that. But when I did the homework that you just did on the call here, I did that at Beaver Creek, and I asked them those questions, and I was like, man, 75%, like this is crazy. There's only less than 100 million shares out, so there's hardly any flow.
Yeah, exactly. Yeah. It's crazy good.
So, yeah. Okay, cool. Well, thank you, Don. Thanks to all our listeners. We really appreciate it. We hope you'll visit our websites, fenneckconsulting.com and goldstockdata.com for some more information about Don and I. We work really hard to try to bring you guys some different types of perspectives out there, and we really appreciate the support. Thank you again.